Hey everyone, and welcome back to the channel. This is the October 2025 edition of the Rake Review powered by Stormrake. October gave us everything. A breakout to new all-time highs, a brutal $20 billion liquidation cascade, and a complete shift in sentiment. But while the chart looked chaotic, what happened beneath the surface was far more strategic. Smart money is moving, macro conditions are shifting, and we're now heading into what has historically been Bitcoin's strongest month of the year. Let's break it all down. The key moments from October, what they mean, and also what to watch for in November. October started exactly as expected. Bitcoin pushed 10% higher within the first week or so and hit a fresh all-time high. It was classic October energy, and momentum was building across the market. But then it all flipped. A surprise tariff announcement triggered a $20 billion liquidation. Bitcoin fell from 117,000 to 102,000 within 20 minutes. This was the biggest liquidation event in crypto history. And it wasn't random. This was a play straight out of the professional manipulator's playbook. Dump the price, trigger liquidations, buy Bitcoin at a discount, build the momentum, and then exit into strength. For leverage traders, it ended in a wipeout. For institutions and market makers, it was just another opportunity to accumulate or rent seek. What's notable is how the market responded. Compared to July, when a Satoshi-era whale dumped billions and panic spread fast, October's price action felt a bit more mature. Sentiment dipped, but it didn't collapse. That's a sign of a more resilient and better structured market. While the liquidations got all the headlines, something more important was happening in the background, the early stages of capital rotation. Gold, the classic risk-off asset, corrected more than 10% from its all-time high as macro fears began to ease. At the same time, the S&P broke into new all-time high territory, confirming a move back and shift into the risk-on territory. Bitcoin, for now, has been lagging, but that's historically how these rotations play out. Capital flows from gold into equities and then into crypto. With Bitcoin leading the charge, the lag could turn into acceleration quickly once confidence and the risk-on sentiment fully returns. And here's a key stat. Despite the macro headwinds and crazy volatility and the risk-off sentiment, Bitcoin is still in the green year to date and has made new all-time highs all before the major capital rotation has begun. It's just something to keep an eye on. This month brought a wave of top-down signals that institutional momentum is still growing. Firstly, Morgan Stanley on the 5th of October, their Global Investment Committee formally recommended crypto allocations for client portfolios, up to 4% for growth portfolios and 2% for balanced strategies. That's a major nod of legitimacy, impacting over 16,000 advisors, managing over $2 trillion in assets. Next, the Fed. The FOMC delivered a 25 basis points cut, bringing the target range down to 4 to 4.25. But Powell's press conference had a hawkish tone, stating that another cut in December is not a foregone conclusion, that cooled risk sentiment into the end of the month. And finally, ETFs. October saw Bitwise launch a Solana staking ETF, Canary Capital brings Spot, Litecoin, and Hedera ETFs into the market, and 21 shares file for a hyperliquid ETF. It's clear that institutional exposure is expanding well beyond just Bitcoin and Ethereum. Each of these headlines may seem separate, but they're a part of the same trend. Traditional finance, capital, it's coming, and it's not just dipping its toe in anymore. Each bounce attempt came with a new catalyst, anticipation of a Fed rate cut, easing China tariffs, capital rotating out of gold, but none of them were strong enough to break the downtrend. Still, the bullish fair value gap was filled, held as support, and that was a key structural read. Now, we head into October, historically Bitcoin's strongest month. 9 of the last 14 Novembers have closed green with an average return of 40.5%. If we apply that average to the current price levels, Bitcoin would push to $150,000. Yes, well, that's a long shot, and betting markets such as Kalshi only give it a 6% chance. The setup is real and it's legit. We've wiped out a bunch of leverage, seen macro pressures ease, and the structure is clearer than it has been throughout all of October. This was a reset month, and reset months often lead to breakout ones. So fingers crossed, November can live up to the hype. Let's take a quick look at how the market performed in October. Bitcoin, it closed the month down 3.79%, reversing its early gains. Ethereum, it dropped 7.64%, underperforming as altcoin flows really dried up. The top 10 coins by market cap, they remained unchanged. Clear sign of market indecision. Bitensa, or Tau, was the bright spot. It was up 38%, continuing to lead the AI narrative. And the total crypto market cap, it fell by 5.5% in October, showing broader weakness, but also resetting the board. This was a flush. Nothing broke structurally, and in fact, we may be looking at a cleaner base heading into November. If there's one key lesson from October, it's this: leverage kills. A single day saw over $20 billion in leverage positions get wiped. That's not just volatility, that's what happens when leverage stacks up and the market gets too top heavy. The problem is that most traders don't realize what they're actually betting on. With leverage, you're not just guessing direction, you're also guessing timing and volatility and behavior of every other participant within the market. Smart money, market makers, institutions, whatever you want to call them, they know where these liquidation zones are. They hunt, they exploit them, they put price into the illiquid pocket, they clean the board, and then they buy spot on the rebound. It's systematic, it's not personal, and if you're not prepared, you are the liquidity. Our full breakdown on this in the Thunder Trading article, we've linked it in the description. If you trade with leverage, and especially if you are on the receiving end of those liquidations in October, it's definitely worth a read. Looking ahead, we've got two big things coming up at Stormrake in the month of November. Firstly, we're hosting a live webinar on Wednesday, the 12th of November. We'll be covering Bitcoin's current setup, macro catalysts, current positionings, and where we see Bitcoin going throughout November, as well as covering what we saw in October. There'll be live charts, a Q&A, and some exclusive insights for Stormrake clients. Feel free to attend. The registration link is in below. Secondly, we're heading to Sydney for the Australian Crypto Convention on the 22nd and 23rd of November. Stormrake, we're a proud sponsor, and our full senior team will be on the ground, including our director and CIO, Bishop Kadera, along with our senior brokers, senior traders, and senior analysts. Our booth will have live DJ, popcorn, and a few surprises. So if you'll be at the ACC, come say hi. And if you haven't secured your ticket, contact your Stormrake broker too. That wraps up the October edition of the Rake Review. It was a month of highs, flushes, and positioning resets, but not one of weakness. The foundation is stronger than it looks, and Bitcoin now enters its best month historically, with macro tailwinds helping it build. The leverage has been wiped out, sentiment has been reset, and smart money is still accumulating. If you found this breakdown useful, give us a like, subscribe, and drop a comment below. Are you positioned for November, or are you still waiting for confirmation sitting on the sideline? Thanks for tuning in. As always, stay sharp, stay ahead, and we'll see you in the next one. Peace.